Hello, everyone. Chad Frantzen. Welcome to the Kingdom Finance Show. I'm glad you're here. On today's podcast, this is going to be part 2 of a series I did sitting down with my business partner and friend, Billy Epperhart. And we sat down, turned on the microphones, and really started talking about our personal opinions on the economy for the U.S. and globally, and also where we're looking to invest our own money this year. And again, I hope you enjoy it. This is part 2 of our economic outlook with Billy Epperhart and myself. I hope you enjoy. Take care. So how do you feel? I know you've talked on some other episodes, some other podcasts recently on real estate, but for those specifically investing in real estate, not for primary residence, but how would you approach that as far as buying real estate with the interest rate outlook for investment purposes?
Yeah, so that's a great question. So I think, we really hit the peak end of 21, of course, going into basically the summer of 22 is when we hit these mega prices for real estate where houses were jumping in price 40%. We had some markets that, it's crazy, but in several years had gone up 80%, that kind of thing. Some, very, some even higher. But I think what's happened now is that at the end of 22, coming all the way through 22, we saw a dip in, number one, we saw a dip in sales at all, period, end of story. And because of that, we saw prices coming down. And I think where the real estate market has been kind of unusual is that there are people that are sitting on these 30-year mortgages that they got in the low interest rate environment we were in that are still at, 2.75% to 4%, and they're not letting go of those homes. So the inventory has not been in the market, right? It's just not there. So what does that mean? Well, what that means, I think, in 24, we're not going to get any relief on mortgage prices, mortgage rates on 30 years, like coming down at a level that I think some people think. So here's what that means. That means that prices of the homes themselves, I think, will continue to soften. That means they'll continue to go down, and that it may not be drastic, like, crazy, but it's going to get softer, and you'll be able to find a house if you look. So especially for first-time home buyers, you asked me about investors. First-time home buyers could look right now, and if they didn't, especially for very first-time home buyers, like we had somebody here in the office we're sitting in that I helped with a home, and they were able to buy a brand new home from a builder who also owned a mortgage company, and they locked in right now. Yeah.
Down the
Well, yeah, and they didn't buy it down. The builder did.
The builder bought it down.
No, absolutely.
Yeah.
So
So
the
they can
builder-
move their inventory.
Oh, man,
smart.
you got it. And so they got a 4.99% 30-year locked in. It's not, it doesn't adjust in 3 years or 5 years or 7 years. It's a 30-year locked in mortgage. So from that perspective, what I tell people, if you want to look for something personally to buy, you might be able to have a little bit more selection and a little bit more time to select than you would in the frothy market we were in. Now, when it comes to investors, what I would say, the same principle is true. The difference is, in this case, you're going to have, and let me go back to the 4.99. What I would say to those is that if you will wait a year, 2 years or so, you'll be able to refi, I think, into lower rates at that time. So it's the same thing for investors. So right now, there might be a little more inventory that's coming on the market in 2024. You'll have a little bit more of an opportunity to select something that's out there. I don't think it's going to be frothy, obviously. You're going to have a chance to make a deal. Then you, as an investor, as long as you don't break your investment principles that we teach on what you should have for your returns, your returns when you're able to refi what's going on. So you're going to be able to do the same thing and refi. So if you want to start looking, there are things out there. Most of them, always remember, for the investors listening, the most important thing as you look and scan through properties It's the situation of the seller. That's number one. Why is the seller selling? What's causing them to sell? Because you're trying to look to get a deal. Then the second thing is really the condition of the property. And so right now, to make good deals, sometimes you have to find both. You have to find where the seller is motivated to sell for whatever the reason. And then the second reason is that if you find something that needs work, most people don't want to do the real work on a property to be able to purchase it. Now, some of the real investors right now are doing what we call the subject to mortgages that are out there. And what they're doing is they're getting these low mortgages on those low 30-year mortgages. Maybe they have 25 years left, for example, on a 30-year low interest. And then typically the way those sell is that then that seller would carry some kind of second mortgage to get their equity out. And then you've got to bring some down payment to the table. And that's where those subject twos. Now we can get into subject twos in a lot of detail, but right now those are some deals that are out there as well, because you have buyers that are wanting to sell.
Yeah, that'd be a whole separate episode.
No, that is
for sure.
Yeah,
and that's a good way to do it. I mean, you can really get investment property for zero down or little down.
That's correct.
And then you're assuming those lower rate mortgages, and then a seller, if properly motivated, will be happy to carry
absolutely
some of that.
You're not going right, and honestly, it can be an advantage to them, even more so than just selling outright.
Yeah. Let's transition kind of for the last part of the show about some of the asset classes we like. I know we kind of painted a doom and gloom picture at the beginning, but there's a lot of asset classes that we are both personally investing in as well as through Wealth Builders Investments. And also want to encourage you, visit us online, wealthbuilders.net/invest. And we want to give you our Pro Values Index that we've updated for 2024, and then also give you the opportunity for a one-on-one consultation with myself and the team. That's wealthbuilders.net/invest. So check that out. Get the free Pro Values download, which we're going to talk about here. And then if you want to set up a one-on-one consult to get specific advice, we'll be happy to do that. So Billy, what are some of the asset classes that you like right now when you look at the landscape?
Well, when we talked earlier in the podcast, we were talking about the, value stocks, paying dividends and then of course we talked about the private equity. For those, private equity, just so we're clear when I'm bringing that up, that's more for your accredited investors. So not just any investor could necessarily get exposed to that class, but many large family offices and larger high net worth people, they invest in private equity because it's really a totally different exposure to you for where your money is. And then those short, one of the things I want to say right here about when we talk about the type of investment, right now, those short-term bonds and even the CDs that are in that 6 to 9 month range of what they're paying. If you look at that, I just want to mention this because we haven't talked about it. Our yield curves are still inverted. So the 2 year, for example, the 90-day, right? The 90-day is actually, it's paying more than the 10-year treasury bond. So when you start looking at stuff like that, especially the 6 month, that the yield curves are still inverted. And so people go, well, what does all that mean? Well, what it means is that the economy is, as much as they want to say on the political side that the economy is normal, anytime you have those inverted yield curves like that, you're dealing with issues that are telling you that the economy is not fundamentally sound. That's what it's telling you. And so right now we're still in those environments. So I think those three things that we talked about, those are good places. Then if you really want to even diversify some more, having some kind of real estate exposure, I think is important and is good. You have to be smart about it, whether you're doing it individually buying or even if you're investing in REITs, a real estate investment trust, you still have to be smart about it. And then I think if you want to be flat out defensive, just be defensive. The gold and silver type, the precious metal commodity type investments are real smart. And I think very candidly, I think having some exposure to just commodities in general right now is smart. So of course there is an inflation aspect to that, to where commodities do real well in an inflationary environment.
Well, that was a lot. Let's kind of unpack some of those. On the fixed income side, we have a lot of investors at WBI who just want to keep their powder dry, as we say from Texas. They're going to be looking for opportunities, whether it's in real estate or in the stock market or otherwise. And they want to invest in a place that supports their values, that's anti-woke, as we call it, and not have it with the Chase and B of A's of the world and so forth. But the 6-month Treasury bond right now is 5.28%, to your point. Now, if you got to a 5-year, you're only earning 4.1%. So just to put figures to what you're saying, Billy, we've had a lot of success with people who say, hey, this is more defensive. It's going to be for a future investment or something, but easily getting that guaranteed 5% through FDIC-insured CDs, U.S. government bonds, right around that 5 to 5.25%. I mean, there's nothing wrong with that.
No, nothing at all.
And we want to hit the home run sometime and go buy Nvidia when it's 200 or go buy a piece of real estate that's 20% of the market. But there's nothing wrong with just parking it in those places. We've had a lot of folks who have moved their money out of the woke banks to WBI out of principle. Just like I do not want that money exposed. And we're talking, if you're a business owner, if you run a ministry, you run a church, we're not just talking about individuals. We are, but it's much more.
Absolutely.
A lot of our listeners have been given great places of authority and management over churches, 501c3s, corporations, and making decisions with those dollars is sometimes higher stakes because you're dealing with bigger dollars and bigger budgets and how to do that. So I love that. Let's talk a little bit about the value stocks. You mentioned at the beginning of the show, the P ratio very high for a lot of these tech companies. That's where a lot of the money from overseas is coming. When we say value stocks, what is it? What should listeners understand of what that is?
Well, basically, there's a principle or there's an accounting term. Really, it's an accounting term, which is book value of a stock. And what that simply means is it's the actual value of the company. If you were to take it and sell the assets that are on the balance sheet, what then would that company be worth? Right. And so sometimes there's an asset on the balance sheet called goodwill. So which really represents the brand of a company. So sometimes that's worth something. But the flip side is just, what is the company invested in? If you were to liquidate everything, what's it worth? If you take a Warren Buffett approach to that, basically he's looking at book value, and there are some companies, good value companies, that are actually selling for considerably less than book value, when you actually see that. And so that's one way. The other way, of course, is just what are they paying? In other words, what kind of earnings do they have based on their sales or based on other ratios that you would use, and they're more conservative. Like, for example, if you look at what would happen if you go back to the internet bubble, right? We had many companies in the day of the internet bubble that were selling for, you can't even say they were selling for 10 times earnings or 50 times earnings because they had no earnings.
They didn't have it.
Right. I mean, and they had no assets on the book. Nothing. I mean, they were burning cash all the time. They were raising from an equity standpoint. And of course, many of those companies went out. So there, you may have a little better definition than I've given, but just means if you're looking at a value, what we call a value company, as opposed to say just a growth company, then the other piece that makes that important is looking at what their record is for declaring dividends. Because really, the dividend that's paid is not based on the value of whether the stock went up or down. The value of the dividend is paid on whatever the company declares per share that you own in that company. And so because of that, I think right now you've got some really good companies that are out there. Now, some of them admittedly are woke, some of those companies. But I think, Chad, you've done a tremendous job of looking into some of the value type stocks that are paying dividends that are not woke, and they've been paying dividends for a long time.
Yeah. And we have what we call a rising dividend strategy that we put together internally. And on that Pro Values Index, we'll tell you some of the companies. There's some great companies like Halliburton, Oxy, Tractor Supply, Caterpillar, that are value companies from the fundamental sense, but they're also companies that we would consider pro values, that are not violating biblical principles, which is really one of our first screens on that. So the rising dividend model, we're trying to pick companies, maybe 30 to 50 companies that are public, that they run their company in a way that does not violate biblical principles, First, Second Amendment rights, but also that they do pay dividends.
Yeah,
right. And
absolutely.
so
and have
been
paid,
for
continue to pay.
there's the whole aristocrat model, right, where we call dividend aristocrats. So we've taken some of that, and we want to find companies that do not violate our biblical values, and second, that they have a track record, 20, 30 years or more of consistently raising their dividend to their shareholders, which really feeds into your teaching. One of my favorite concepts is the triple X of creating passive income.
Right.
And so that's a key part. We work with a lot of people who are investors in real estate, but they want to diversify around the real estate to do things that will pay dividends, distribution. So this is a great one. We call it the rising dividend strategy. If you want to learn more, just reach out to us on that. So this has been really good. I hope this has been insightful, just for Billy and I to share with you where we see the markets and some of our favorite asset classes. Anything else you want to share before we wrap up?
Yeah, I just say, the greatest times of wealth transfer are in some of these uncertain times that we're in. And so I just want to encourage those that are there that God's got this. Don't let, 2 Timothy chapter 1, verse 7 says God's not given us a spirit of fear, and there is hope and there is opportunity. And so we need to be aware of the circumstances that we face. But the Bible says in Romans chapter 4 that Abraham, I think it's the NIV, it says Abraham faced the fact that his body was dead, and it uses the phrase he faced the fact. So you have to face the fact of where we are in the economy. So we try to bring that to you, but we don't want that to replace the hope that there is hope for the favor of God and the blessing of God on your life and your investments and all that you set your hand to do. So I just want to say that, but we want to educate, right, and inform here so that we're able to face the facts.
Yeah. No, that's great. And I'll just share, I talk a lot about the Solomon strategy, but a lot of that comes from Ecclesiastes 11, verse 2, where Solomon, who, we have to remember in those days was worth more than the 5 richest people in the world today. Today. Yeah. So whatever that inflation adjusted number is, but you can take, you can take, Buffett and Bezos and Musk and all of them, roll them into one, and they still didn't match the net worth that God gave Solomon. But he said in Ecclesiastes 11:2, invest in 7 or 8 different ventures, for you know not what will come upon the land.
That's what he said.
And so we call that asset allocation, but it's godly wisdom of how to steward resources. So whether you're a business owner, you're running a ministry, or you're just taking care of your own personal retirement, college, long-term wealth accumulation, I think having a comprehensive plan where maybe you have a business and you have real estate, you have some gold. It's not just pick one and see how well it'll do. You're going to do the best by having a combination, 5, 6, 7 different strategies. So just want to encourage folks with that. Again, check us out online if you want to learn more about how you can create a kingdom financial plan through Wealth Builders Investments. You can connect with us online, wealthbuilders.net/invest. We've got our top 30 companies to promote and our top 30 companies to boycott. We want to give you that list. We call it the Pro Values Index.
Absolutely.
We just updated it at the end of 2023. So please go and grab that resource, share it with your friends and family. We want you to spend, but also invest your money with biblical values on that. When you get that download, you'll have an opportunity to schedule a phone consult with myself or my team, and we'll be happy to connect with you one-on-one. Well, this has been a great opportunity, Billy. I appreciate you coming on the Kingdom Finance Show. And thank you, listeners. Please subscribe, like the show, pass it along to others who are kingdom-minded with how they manage resources. Any other thoughts, Billy?
No, I just want to encourage people listening to continue to listen to the podcast here and follow the advice that you're giving and we're giving and others that you'll have on. And I believe it'll be a real value to their life.
Great. Well, Billy, thank you again for coming on the show, and we will see you next time on the Kingdom Finance Show.
Thank you so much for joining me today on the Kingdom Finance Show. If you enjoyed this podcast, please subscribe and leave us a review. It really helps to get the word out. For more resources on becoming a Kingdom investor and to connect with us directly, visit our website at wealthbuilders.net. That's wealthbuilders.net. We'll see you next time on the Kingdom Finance Show. The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Authentic Counsel, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine risk factors and other information contained in the memorandum.